Hmm. Oh, one viewer. Could be someone. Let's see. Post post a message in the chat if you're actually there. Yeah. It's pretty quiet, eh? Yeah, not much, not much. Just ironically watching the first close that we've had today, where there was a bit of a sneaky regain of trend, and kind of the first point where we've actually got a little bit of a possible recovery. But the ironic thing is that most people are asleep because the market has been just either boring or depressing, so no one's really watching. Other than that, just drinking way too much and scalping mostly. It's going good though. If I could find my phone, here is it. Here is it. English has broken down. 205.7% up, 208, 211. It's amazing how the percentage flies around when you're 100x, but still. 212, 213. Keep it going. Yeah. Yeah. Like these next few months are probably going to be like some of the toughest, most boring months. Really, I don't think this is the bottom. It's just doesn't really fit. But is it a bounce? It really should be. We've accrued so many longs. It's just looking at this kind of thing. So if we look at longs that have entered and exited their hold levels, but they haven't actually closed inside their hold levels, and we take ones that have had entry and that are incomplete, and then if we look at shorts, there's one short. And it's probably pretty fair to say the bottom will be somewhere between there and there, because you can't go negative, but we haven't got back over that. We've basically got 138 days. 138 days to get back over that and stay over that. If you go over it in the next 138 days, that's all well and good. But if when that hits zero, if you are below that, then you're coming down here. So that's the only short that's left on the table as far as high time frame. And this is where it gets really weird. There's a lot of longs, a lot of them. And that's really different from the last bear market. So if you take trades that activated during so that was roughly the top. think. Nah, that's not right. Probably have to find that chart again. Yeah, long Sol. Yeah. I've been long Sol since about $68, just scalping it as it goes up and down. From about down here. Oh, we've got 5 people online now. So at least there's 5 people that are still there. Come on. What was I doing? I was looking at one of these. All right, daily top. Right, 10th of November. All right, so clear all that, start with this. No, we want trades that got out of the hold. And we want entry between November the 10th, 2021. I don't know if anyone noticed this, but did you see where the bottom actually was? Basically November the 10th, 2022. Exactly 1 year from that point to that point, which was a little bit freaky. So we want trades that entered between there to there. And then we want to see which ones actually played out within the downwards curve. So that would be, well, let's go the other way. Let's say which ones didn't play out within the downwards curve. So they all did. So it would just be these. There you go. So out of all the trades initiated when we were in the last bear market, only 2 of them didn't play out as the price moved down. And to be fair, they were entered quite close to the bottom. So 9th and the bottom was the 10th. So, okay, fair enough. They didn't finish in the downwards motion because they had to go back up. All these others, whether they were long or short, played out as we were going down. So most of them were shorts, which was kind of makes sense because you're going down. How that looks really different from now is that if we actually look at current status of things, it's almost completely longs, which is just really weird. Yeah. So yeah, I don't know quite what to make of that. And they're not exactly over the top as far as targets go. They kind of range from, if you take the short out of it, 72.7 through to 95K for BTC. So it's not exactly like it's a all-time high, but yeah, the real question is, why are we not going up? Yeah, different narratives maybe. Guess there's almost just no reason to go up or down. There's just the biggest narrative around crypto right now is that no one's interested in it. Yeah, correct. It doesn't have that black swan sort of FTX crash or Celsius or any of that kind of stuff. There's just an outstanding short and a whole bunch of longs, and price needs to do what it does. But if we look at it on a chart, all it's really got to do is bounce from here and come up into this area, which is pretty open space, really. It completes everything and then it can go down, or at least complete some of it. Hmm. So who's out there? We've got four. We've got four people. Five. Oh, just jumped up. Six. Yeah. Good evening from Southeast Asia. Nice. Still evening. It's about 1 o'clock in the morning here. But I have reason to celebrate today, so up and celebrating. Um, this is something I was looking at earlier, which was quite interesting. Doesn't tell you what price things are going to be, but gives you an idea of where bottoms could be. So just Sol USDT divided by BTC USDT. Thought that was a little bit, yeah. So you put your range fib on there and can't exactly get to level 4 because that would be a bit too far down. But yeah, kind of found the bottom quite nicely. Unfortunately, it possibly means that we're now in something like this. And it just shows the arrow everywhere, so you don't know what the price is, but it's a pretty good indication of where you might find the bottom, whatever the price is when it gets down to here. Yeah, I'd be thinking 40K just based on everything I've seen in here. So if we look at ranges created, breaks not hit, and we got 47, 46, 53, 34, maybe. Pretty big. 4 month. Yeah, so cycle theory like this would suggest that somewhere around here, 300 odd days from here. So it sort of suggests around here is about where you find the bottom. It doesn't actually say how low or high that bottom actually is. So that's where we start looking at things like probability of ranges. So this is what has created this support. So that was the minimum obligation long. What we didn't do is we didn't retest that break origin. So that is a little bit weird that it didn't quite touch that. It got really close, but it just sort of implies that there might just be a double bottom type scenario, and therefore maybe this is the bottom. So there'll be some kind of 4-month range trend that'll form like this. So yeah, it's probable. Could find a bottom around here. The other side of it though is that if it doesn't recover the 7400 sort of level, and the real key level is 74,466.4, because there's multitude of different timeframes in play, but if it doesn't recover that sort of area, then that's where your 40s come into play. So I guess we're waiting 2 months and 19 days to see if we actually close over this level. And if we do close over that, then we'll likely bounce back up and challenge what's trying to keep the price down. So yeah, job of this thing is to break this trend. And job of this trend is to try and break this hold. This hold doesn't really have much of a job at the moment because there's no actual downtrend to challenge. But it can become resistance if the price ends up closing under here. We've got 8 people watching. It's cool. Let's go with Sol. So yeah, made it to level 3. Okay, so yeah, not much going on. We've been slowly breaking these 4-hour trends. So yeah, 85 still very possible. Thing I've found lately is we just seem to be going to very minimum areas. Like as you can see here, we just kept on punching into that 88 area and just couldn't get above it, couldn't close above it. So it's just minimum expectation of the structure down here was to go there, and it just did it, dropped, and then we fell into the base. So now minimum expectation is to go to this 85 level, and it's just slowly creeping up and breaking trends, but it's not exactly a very punchy recovery, which it really could be if it wanted to be, because everything's tested. You know, this candle wicked up here, grabbed this took this. So every single sort of level that's in there has already been tested as far as hold levels go. So there's no reason why they couldn't just have a single candle that just goes straight up and hits that, but just slow. Maybe this time it'll do it. S&P 500? No, I don't know. Let's have a look. I don't even know what to look for. I've never really even bothered looking at the S&P 500. Guess it's not that. Oh, yeah. SPX 500. Wow. I mean, from a daily perspective, I'd be watching for that, just in case it hits that and rejects. But that'd be a daily. Must have been such a big move. Sorry, what was I on? The monthly? Was I on the monthly? Sorry, I was on the monthly. Yeah, from a monthly perspective, I'll be looking for that. And if it closes over there, then up. That's pretty impressive if it actually closes a candle up here in 2 months. Yeah, I mean, all in all, it looks pretty strong. It's let's see, 3 months, 4 months. Is that a 4 month? Yeah, it looks very strong. leaving hold levels behind is not inherently bearish. In fact, it's actually kind of more bullish. When you get the hold levels tested, like say this one, that means that that is not likely to support price again. So, and then this, which is not quite an engulfment of that prior candle, so that's also a little bit bearish. So that's on like a 12-month scale, and you'd probably expect there to be some kind of pullback within 12 months. If you look at it kind of on a monthly, let's find those trends. Yeah, so it's kind of gone pretty parabolic, and it's on the wrong side of support, so it wouldn't take much to knock it over now. Like, it just needs a blue candle basically. Yeah, there's no hold level here, so your hold level's all the way down here. Yeah. So anytime the candle starts basically just drifting across from the support, doesn't take much to break it. But the thing is, it's all about the wick. So if this candle closed down and closed blue, opened on the wrong side of the trend and underneath the resistance, then it would almost certainly start to move down. Whereas, say this did a big dip down, tested this prior broken trend, then went back up and closed blue, and the trend was, say, further down here, then it could still just continue to ladder along the trend. So it's kind of, it's got the ability to break down from here, but it's not doing it at the moment. This is slightly bearish, just the this candle here, the way that that trend was coming through here, and then this one failed and this one failed to recover it or get back to it. So that kind of indicates a shift. Yeah. So sometimes you see that sweep and then the downtrend begin. That. Because yeah, that's, this month hasn't created a higher level than that month. So up, decrease, sweep, lower. Maybe it opens on the wrong side of the trend. Reject, down, maybe. 15 days. Yeah, if anything ever opens on the wrong side of both trends, then there's a pretty good chance it'll go down. It's not exactly anything to keep it up. Like this type of structure here, if it just opened a new candle, doesn't create that, So therefore it's really just under this lot and under that range level. But if it was to turn blue, that changes things a wee bit because it creates that, and then it's under this, 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 and that. So yeah, pretty good chance it goes down. Yeah, if it closes the month up here, then chances it just keeps going up. Nice. Really has had a pretty huge run, hasn't it? So that's the moment you want to short that one there. So you got a break level across here. Converts to an origin because of this candle. Retouches on this, so you open your short. Down it goes. Nice. Then you could long this hold. So that bounce there. So you short the origin, into the hold, long the hold, back to the 1618. 2 trades, 2 days, job done. Give us the tools already. I seriously would. I seriously would. It's a bigger thing than just me. I was asking today if I could show everyone the dashboard snapshot because it's really quite cool. Like it just shows you the closest this, closest that, you know, like resistance, support, first touch to origin. Tells you kind of what timeframes are in play, like what's just been created and all that kind of stuff. It's just it's pretty awesome on top of the tools. So yeah, I think the wider group is hoping to have everything sorted by March, but don't know. I just do me. Buy stuff, sell stuff, make money. They definitely make life a bit easier though. Mostly just because you can set alerts and stuff on them, so you'd know on the closure of this candle that that area there was a shortable area, and you'd have that alert like a day in advance, and then off you go. Get your alert, check your chart, do your short, find your target. See you've got this hold level. You actually would have known you had that hold level there several days before as well. So you can have your long sitting down here if you wanted to, and have your short up here within a day, and short into your long, and go schlong. Job done. Decent amount of green. Check this out too. This is weird. It's not weird, it's just different from prior cycles. Like you look at your whole 2019 type cycle, and then look at this one. Just very, very, very different. You're welcome. Enjoy work. Can't help but wonder what happens when it hits these high time frame origins up here though. Particularly this one. 74.76. Whether that's gonna just absolutely send it back down. Yeah, reversal pump. Yeah, it's a decent amount of green. So closes like this aren't actually like you see a blue candle, you see a hold level, but you also see a hard closed break level, which was an origin. So yeah, closes like this aren't actually that bearish. It's kind of natural to come down and retest a level that it gets a bit bearish if it closes underneath it, or if it pushes back down under the trends and that kind of thing. But at this stage, it's still trying to grind its way up very slowly. But yeah, doesn't look like a completely full-on reversal yet. Normally, if you hard close an origin like this, you'd just explode to the upside. You'd be up here at 68.7. Sort of shows how weak everything actually is. Hmm. Yeah. Yep. Very, very much fine-tuned. Yeah, you look at this and it's just fail, 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 close below, reject, down. It's all just this basically. So rejects off a range level, goes back down, gets below the range trend, rejects off the range trend, continues down. Ends up back under that 4-hour trend. One just got 3 hours and 40 minutes to creep its way back up. So it might pull back and then bounce up before close. Who knows? So in a bullish market, we would have basically just bounced off this, traveled up to this. So that's your move from 78.9 up to 85. We're just kind of sitting there at about 81 and working through all that lower time frame stuff. And it may still go there. It's just what they probably don't want to do is they probably don't want to engulf that on the daily, or they probably don't want to engulf that on the daily, because if this one daily candle goes all the way up there and closes up there, then that's more the sign of a proper reversal. So it's just plodding along and doing its thing. And if it closes under here, 78.9, then down we go. So if this dips back down into this, then could probably look to add back what has been TP'd out of that so long, add it back in when BTC sort of comes down into here, and then TP it back up here again. Yeah, well, the 4-month move was a decent move, and the weekly on Sol was a decent move, so don't need too much more than that. Whatever that was. Catching this bounce here, decent. Catch you later. Yeah, and if you were watching BTC, it was catching this. That was it. Short from here to here, long from here to here, and now we wait. Try to figure out what it's going to do next. We got 9 people watching now, so speak up, speak up. Yeah. See, you watch videos like that, and then you just know that stuff like this target down here, at some point we just need to get to this target, and until we do that, there's forever going to be some kind of weakness in Sol versus Bitcoin, and that's kind of that minimum obligation. And of course, down here is your hold level, which means potentially lower, and this trend through here, well, it's going to want to try and bounce the price up, but 1 month and 20 days to see whether this pushes back up and then bounces off that and heads up, or whether it just grinds down and ends up below it and pushes further down. Hood. It's Hood. Let's have a look. Wow, Robin Hood. Oof. Yeah, that doesn't look great on first impression. Oh, there we go. Here's a little trick for you too. Just trends down, still down, reversing, long. First TP, second TP, third TP, and then feel really shit about yourself because it just went up massively, heaps higher, and you'd already taken 3 TPs, but whatever, live with it. You made money. Nasty. So it's got 2 months, 19 days to go, but you can imagine if it was to close right now at this very moment, it's on the wrong side. So you want to see this thing closing up above. But it is always going to have some kind of magnet that's going to want to pull it back to do that retest of that break level, which is possibly even higher than that. Yeah, not great. Need the same candle on Tesla. Yeah, Tesla almost looks like it's actually trying to create another weekly range. It's not super bearish. What was it, 1 week? Where was that? Oh no, it's gone down again, hasn't it? Sometimes I look at these stock charts and I feel like I'm going mildly insane, like Tesla weekly. I am going mildly insane because I had replay tool on. There we go. Tesla weekly. So yeah, this is very possibly, if it can close just a little bit higher up, going to create a new range off this origin. And if I can get this to stop lagging. Come on. Oh, whole computer's gone laggy. Right, here we go. And the reason I sort of like this is just if we show just the prior range that failed and the current range it's trying to create, quite similar levels. As you can see, almost identical up there. So yeah, this whole range just kind of failed because that candle closed just on the wrong side of the range level. So this whole thing here was just doomed. But if this can get above 431.89 and then start working its way through those levels, it might just be trying to do what they did back there. Yeah. Yeah, these charts obviously, when you look at them on the weekly, they don't have the gaps in them because they are technically tradable over the weekends. If you look at the dailies, quite often what you can see is a couple of really sort of flat candles, which is Saturday, Sunday. So they can still trade, which hence these two. But the thing I like about this is there's no pre-market, post-market BS, nothing like that. Like if you had this daily hold and you wanted to long it, you would just take that long, and this happened on a Monday, but the thing is that entire move can happen in pre-market, and by the time you've actually opened your trade post-market, you've already missed the entry, you know. So it's kind of the cool thing about synthetics. But they actually do have zero value on the price of the stock, because unless there's a huge buy up, so whoever manages this, you know, this synthetic, they have a certain amount of Tesla stock and they have to have it backed. But the thing is, unless there's a massive buy up which takes it outside of the amount that they already hold, they don't actually have to buy anything on market. So it doesn't. So all this price action that happens in here is really just a oracle reflection of what happens on the real market, and the stuff that, you know, happens on these particular days when the markets aren't open is just people buying and selling this particular stock, but doesn't mean it doesn't go down or up afterwards. It's kind of does its own thing during certain times and then follows along with the market on other times. And if they happen to have, you know, $10 billion worth of it and you bought $11 billion worth of it, then you're forcing them to go and buy $1 billion, and that might rise the price. But if you bought 10 and they had 10, it doesn't change the price. So kind of interesting when you think about it, that you're not increasing buying pressure necessarily, or selling pressure for that. Actually, they don't have to sell at all, you know, because they can just continue to hold the underlying asset. So if you short it, they don't actually have to sell it. So it doesn't create sell pressure if you short it. What do we got? 8 people watching now. Wonder if they're the same. The thing is, you can never tell whether they're the same 8 people or a different 8 people. Oh yes, I totally get it. Brings coffee. Brings coffee meme. Why aren't you in the Discord bringing coffee memes? Are you in the Discord? Thoughts on Arc? Yeah, so I looked at Arc recently when someone asked me about it, and it's holding up really, really, really good. You're in the Discord. What? Where's the coffee? You mean the FibLab Discord or the IA Discord? So I think, yeah, I was looking at Arc, and then I looked at the market cap for Arc. And it was a really different story. So see the market cap? Just dying, right? But the price going up. So it made me think they've obviously got some kind of really big token burn mechanism or something in play. There's the only way you can have the price of each individual token actually rising whilst the market cap is going down would be that they are literally just wiping tokens off the board. So yeah, I don't really understand the complete mechanics behind it, but as far as a tradable token goes, it's beautiful, really. Now you got nice little origin bounce in here, creates a range, comes down, tests it again. It's quite extreme, so you'd have to have your stop losses really, really wide and maybe not take out such huge leverage on it, but creates a range, comes down, tests, fails to get back to it, comes down, touch it long, so you see it's definitely a very tradable thing. It's got a whole bunch of stuff left behind though, like this range trend on the daily hasn't come back to do a retest of that, so it's going to do some kind of dump at some point. If you'd shorted the break levels, shot quite a way through it, but still did what it was meant to do. Same thing here. Origin shot really far through it, but still did what it was meant to do. So I guess you'd label it as very volatile token. Certainly not something to take a exact on the line entry on, but definitely a very tradable token. Only concerning thing is that the market cap is actually basically going to zero, even though the price is going up. So as long as they keep burning, price keep going up. Can't see a live stream in Fibs. Does it not? It's in the video and tweet feed channel. Blue Dragon has sent a laughing face to it. Anyone out there? TCA levels for hype. Okay. I actually have hype data, so give me a minute. I'll run some reports. And by a minute, I mean longer than a minute. Takes a while to run this stuff. Or is it Asta data I have? No, it's hype data. It's definitely hype data. Started backfilling hype data into the database recently. Just got to erase 1,490 files and replace them with hype files. So while that does that, let's talk shit. Let's look at hype. Yeah, newer tokens are just way easier. They've got a lot less going on. Yeah, it's like Asta. There was 56, 0.56 was the monthly reverse trend. There's nothing bigger than a monthly, so all you had to do was long that and just wait patiently, and you'd be up at 71 now. I think 81 is the 8109 is the monthly target, I think. So yeah, it's easier when they don't have years worth of structure. Something in here. 2 week. Yeah, so 28388 was your entry, first TP 31, second TP 36. And now you're sort of waiting 3 days to see if it recovers this 31.645 and whether it will progress through that. Crazy thing is that if this actually has a trend break, the wick is kind of too long, so your resistance will be more or less a double top, so same sort of area. But yeah, if it does actually end up yellow and have a trend break, it's going to try and come up to this break level. these are all these weird signs, recently that although we're thinking bear market, bear market, bear market, there is a lot of signs. Like all it actually takes is for this thing to have a trend break and it'll start working its way up to a break level because there's no hold level. Let's see what this data is doing. Oh, it's frozen. Goodo. Keep waiting, I guess. Let's see. We have in the monthly is not great. Not a lot of structure really. Just stuff like this where it doesn't quite engulf. But if it ever comes back to this trend on the monthly, could be a long. Retest of the break level. Let's see what we've got more short term, eh? Let's go weekly. Yeah, so the daily's above trend, not breaking it, but not looking. Things are actually looking a little bit more bullish than they were. It's your 4 hour. We're heading back to the hold. Nothing more than that. So it's basically it's above the daily and it's rejecting the 4 hour trend and it's heading back to the hold currently. And yeah, you could probably, so you might get a range scalp here to here and a minimum obligation long here to here. Okay, data is done. Let's run some reports. What's happened there? Everything on my screen just crashed and came back again. Not sure if I'm still live. Okay. Right. Hype data. Okay. So not looking great. Doesn't really have a lot of reason to go beyond 32, 34. Oops. Oh. Try this another way. Yeah, so that, they're all done. Let's see. Yeah, if anything, it's got a lot more it's got a lot more short structure. Yeah. So it's got some little hidden things like this going on. So yeah, that close was today. Yeah. See, I don't know whether that's overly bullish just looking at that. $77. So this is the difference between exchange structure and TradingView structure. So on TradingView, you can see you got this long, which is fine, and you get your long, and it's all good. But on the exchange structure, you can actually see that you've got the short as well, which over here you don't have. Hmm. Yeah, I'd probably have to go through all of this and actually have a really good look at it. But from a balance of shorts to longs, there's total of 25 outstanding moves, and 2 of those are longs, the rest are shorts. The longs lead to 34 and 32, and the shorts pretty much lead to as low as $4, with the bulk of them around 20 to 25. So it looks a little bit sus for the now. Oh, we're pumping. New York Open? No. Bouncing off a trend. All right. Oh, 6 people still watching. You found it easier to trade until it wasn't. Yeah. I found the same thing with Esther. It was it had at the very beginning all it really had was 4-hour structure, and then next thing you know you got daily structure, and then the next thing you know you got 2-day structure. So you just got to keep watching and zooming out. Like the longer something ever exists, the more you've just got to keep zooming out to make sure that you're actually on top of whatever might be getting created. You're looking at a series of daily candles. Eventually, that series of daily candles is actually going to be structure of a 2-day. So nice. Is there anything else anyone wants to look at? So we've got hype, which it's fair to say we've missed the boat on the really big short, and we've missed the long because we weren't really watching it. And if you just wanted to scalp it on a lower time frame, then that's a whole different story. But that October 10 dip really made a mess of things. See if it gets up over this. See? Tap, tap. Reject, reject. See if we can get a close over that. Maybe an engulfment here. Didn't hit the break, so no origin, so not a proper range if it does create one. Seems we're just really waiting on BTC to do something. Shall we, shall we scalp some 30-cent moves? How do you trade them? Same way you trade anything really, but it's more about the um, time frame and the distance to the stop loss. So if you were to take a really small move, like what's a good example? Like that's probably, what are we on, a 15-minute? So like you could take this reasonable risk because you're going into that trend. So you're probably talking, yeah, 0.3 to the trend. I mean, it went all the way to the top, but you could take that. By the time you pay 0.01 on fees in both directions for opening and closing, and you would want to take your TP there because you don't know that it's going to come all the way up here. Still make a little bit of money. It's not huge, but it is a front side, so, and it's directly into trends, so you'd sort of, yeah, definitely risk. The ones that are the best to take are generally the ones that are the bottom of ranges, like this one. So what you're kind of looking for is you want to see something that's actually created a new high. So distribution starts here, comes down, goes up, new high. Test the hold. More often than not, this will go higher, like more often than not. So that's really the kind of trade you just want to wait for, and that gives you, 2% if it goes the whole way. And if you're just trying to make 1% a day, you're going to have to basically do that on like 2.5x, 2.5x, and that tiny little move there, which is almost the guaranteed move, will give you your 1% you need in the day. So that's other things you could do is like, that's a pretty good break level. Came down to a low. So if you look at that as your prior low and you hit the break level, did you go lower? Yep, you did. So short that. Probably take a TP there just because it's where all the trends are, but still that's 1%. And these are only 15-minute moves. So if you took that just on 1x, it's 1% for the day on your port. So you've made 2. Probably wouldn't have TP'd that earlier because that's single candle, single candle, single candle. So you would have TP'd it there. So yeah. So you've made 3% in a day. Job done. Why the exchanges lower the max leverage? There's a few reasons. So sometimes it's about how much open interest there is in one particular direction. So effectively, they're trying to limit their own risk, like the exchange's risk. So if they give you, say just hypothetically, will never happen, but hypothetically they give you 10,000x. The problem is that it can travel so quickly that it can pay out the other party on the opposite side of the transaction more money than what you have in your account because it goes well below what you actually have available by the time you get liquidated because the leverage is so high. So that's one reason. So they'll often limit leverage to make sure that the overall financial balance is not risky. Um, and the other side of it is sometimes they just do not want one party for opening too much of the open interest, and it's actually like half of they talk about manipulation, all that kind of thing. If you try to open a $20 million position on a exchange and you are the only trader, they just simply will not let you do that because you would be too much of the position that you could actually be manipulating the price. And so, yeah, sometimes they limit leverage because they just want to stop manipulation of price. And other times it's just purely because they are trying to stay within the risk profile um, to ensure they do not lose if you lose. It's on Hyperliquid. One of the things that a trader realized recently, well, when I say recently, maybe 6 months ago, was that if they were losing at a trade, the best thing they could do is actually just withdraw their collateral. Because what ends up happening is they have no collateral, they withdraw it all. Suddenly, their position is liquidatable because it's got nothing behind it anymore. It gets liquidated, but the thing is, there's nothing to liquidate because they've actually just withdrew all their collateral. So they were actually running up positions into really bad states, and then they were just withdrawing their collateral. And when that happens, it comes out of what they refer to as the insurance fund as such, or what there's probably different names for it on different exchanges, but part of the fees you pay, a little bit of it, goes into this fund, and that fund is designed to offset when you get liquidated beyond the point of which you can actually pay the other side. The exchange pays the other side. So that's why things like October 10, when the liquidations were so massive, it's not actually good for exchanges because they end up having to pay the difference because the traders can't because the price moved too quick. But yeah, so there's several reasons why they'd limit leverage. Mostly it's about risk against the exchange or price manipulation. Then they send you a pretty email telling you they still love you and they want you to continue trading with them. And then they send you free shit. Nah, exchanges don't ban you if you have success. It's yeah, I don't know where that comes from really. The more you trade on an exchange, the more money they make because the fees. They want you to make money. Because all an exchange actually is you versus a counterparty. The exchange is just managing the transaction. So there's the market makers in between that provide liquidity and they control the spread. So it's really, really hard for an exchange to physically lose. It's either typically going to be a counterparty losing, so you're long, they're short, you were right, they were wrong, they lose, you win, or it's going to be a market maker because the spread exceeds normal delta neutral balance, and they get stuck in a position which then turns out to be incorrect. So they accept a whole bunch of sells, but then the price tanks. So then they're stuck with stock of an asset, which is then lower price, and there's no buying interest. So it's really hard for an exchange to lose. Like, it's a massive money making business for an exchange. The like I know one exchange which is locked. Several people I know have had their assets locked on it, but I don't think it's actually because of success or anything. I think it's just more because they don't necessarily have available backing for their assets, and they list things really early, like to the point where I don't actually think they even have it. But it's just is what it is, and that's why I don't trade on them or talk about them. Are there any ways to know ahead of time of the likelihood of first touch origin trends? Um, Getting swept versus reacting instantly. No, no. I mean, there maybe. I guess it comes down to whether there is a whole bunch of liquidity on the heat map, I suppose, and whether you're bearish or bullish. Like, if it say you had a resistance origin at the top of a range, if they were going to absolutely dump the price, they would probably sweep the origin. And that's simply because they're going to want to try and take all that liquidity that sits above a level that previously people had thought was a strong level. So they'll sweep it to then go down. Um, but normally that happens when it gets created. So the next touch is more often than not pretty exact. So I don't know if there's any good examples here, but I mean, sometimes they just never get, you look at that. So that is now an origin level because of these closes, but it's never been revisited. This is probably, that'd be a better example. So it's swept up a bit, came back down, created the short, found support on something. So there's a challenge. What found support there? Could have been the trend because it came from the top side of the trend. Break level. Yeah. So came from the top side of the trend, got back up, closed over the break level, created a hold. Up it goes. Yeah, we should start an exchange. Bouncy, bouncy. Do, do, do. Did everyone see that BTC close today? Oh, broken. Somewhere in here. So it was a bit of a mixed bag of closes today. So we've got ones like this, which we've closed a candle down below the break level, which means we might hit resistance around that 69 area. But we've also closed outside of the hold. So you're going to have a reason to come up to 75. So it's going to be quite interesting to see whether this hits 69, rejects down, goes for the trends, or whether it keeps pushing up and goes through 72 and then 75. And then this one didn't quite do the origin retest, but closed above trend. So first level there at 73. And this one, I've shifted the trend back one candle just to try and allow for this lovely empty gap here. And it just opened above, which makes me wonder if we're going to go back to do that 74 466 retest. And then maybe down to 44. We'll see. If we do start an exchange, you can bring the coffee. Can't tell me that does not look like a short squeeze is coming, eh? Yeah, that's exactly what I keep thinking. Just keep looking at the data and going, why? Why have we got so many longs outstanding? I mean, we would tick a lot of boxes even if we just go back to here. It closes quite a few of the longs. So obviously if we're getting the one short, if we go retest that break level, we close all of these. So that's so 4-hour chart. Good example of range creation, long TP. Doesn't go back to the body of the hold always because of that full engulfment of the wick. How high would I expect Sol? From an unbroken range perspective, the highest outstanding move on Sol is about 130, 133 at the moment. That can change because if it goes up, it will exit holds, and then if those close and they're bigger, it can create different highs. But it can also not play out because over time it might go down and close inside of those. But it's just if you look at the difference in structure between Sol and BTC, BTC has a huge amount of longs saying let's go up. Sol is pretty even, more shorts, really more reason to go to the downside. And when you look at the Sol BTC chart, well, that just makes sense because we're just rejecting off trends, we're rejecting off hold levels, we're going down, and yeah, I'm not like at the moment. I'm pretty much just very bearish on Sol unless it does a decent dump and then fast recovery. Because something like this chart, it really needs to just go to this level and then bounce. And if it does that, great, because it can come up here and retest trend, and it can have like a really good pump. But at this stage, it just seems to be grinding down and staying down. There's just almost no buying pressure. Yeah. So I don't know whether it's over cycle wise for Sol, maybe. Like this is that's the market cap. So regardless of the dollar value of the token, if you look at it, bull run, bear market, bull run. Doesn't really look like it needs to go back up from a market cap perspective. Could it? Yeah. It really needs to get back above that. That's a bad place to be. Below there's a bad place to be. That's what gets it back up into the range. Oops. If you Sometimes I feel like I lose my voice at 3 o'clock in the morning. If you look at this at like, there you go. So it doesn't really feel like it had a bull market when you look at that. But it did. So that's the cold hard truth of it is that there was just so much printed that the dollar value didn't really reflect on the individual token basis. Yeah. It does also kind of have me wondering where the bottom will be. Because like a dilution of the money, say for example it goes all the way back to the very bottom, let's say it goes to $8. If a single token is valued at $8, but there are more of them, then technically they are worth more because they've held a higher value even though there is more of them available. So yeah, it sounds kind of weird, but like even going all the way back to where it went to technically is possible and actually still shows it holds value. So from a data perspective, there's a couple of fringe ranges which so these are your high probabilities, which is basically 133, 51, 35, 42. So these values. And then when you start to dig into the range brackets, so that. Okay, so this is everything where the opening candle is between 1 and 2, but it's only achieved 1, so it hasn't gone to 2 yet. So then what you do is you look at 2 and you go, well, where's 2? And that's when you start to see $8 and negatives and those sort of values. So like really it could go all the way back, $4, 16. Just depends where it closes. But you could also then argue that could go to 145. So yeah, when you go through all of the different ranges that are available, all you end up with is basically it could end up at $600 or something at the top side, I think, and forget all the negative ones, but you sort of end up with things like $11 versus $600, and then you can sort of narrow down the probability, like has it closed inside the hold, And that's where you actually start to get moves that are more likely to actually play out. So there's about 700 there. So yeah, these aren't bad numbers. 76, 56, 61. And then you start looking at some of the time frames on these and you go, well, 444 days. So this could be next cycle. And when you start looking at these, you go, well, okay, well, if we're on a 445 day time frame and we're 297 days in, and it's about, or 297 for completion, and that's about the point at which you would start to DCA, because that kind of lines up with your traditional cycle timing. So you look at your normal cycle timing, and about 300 days, you might start to DCA, and then the price might go up, right? So let's just say cycles are cycles and they all stay the same. Nothing says that this particular piece of structure here can't take the price all the way up to $634. So it can. Did we get to 86? I don't think we did get to 86, did we? Today. Yeah. So in the really small game, I'm just hoping this thing gets back to 85. But like I said earlier, taking TPs along the way at every single low time frame level, because it's just pathetically weak. Ooh, got 10 people watching. Say hello in the chat. I'm losing my voice. The thing about trading is it's a pretty quiet life, really. You don't talk too much. Oh, 13 people. Wow. $8 would be great. Is it realistic? I don't know. Don't know. Problem is time. You know, time changes structure. Time changes, what bracket and what levels price closes in between. Upgrade the drink to vodka. Yes, it's really hard to say, do you, if you actually really could tell 100% that you're going to get $8, you'd just open a short right now. You'd close it at $8 and you'd long at $8 and you'd close it at whatever you knew was the next price. The problem is you can't really do that. You know, we may hit a range trend because I mean there's plenty of things that could be support on the way down. You know, so you may hit something that is support and it might bounce from that and then head off to a new high, and it is what it is. So yeah, could it go to $8? Absolutely. Will it? Don't know. And here's a good good example. You want 85 because you look at, say, your 2-day origin here at 85.082, and it's got a lot of confluence across a whole bunch of time frames, 6 days and 6-day time frames. They've all got areas for resistance about here, and it's on your daily. And then you come across here and you look at a range level on your 3-day, which is at 84.2. So if they want to reject before 85, which is still a level technically even on the 3-day, they could just reject off that. And then you may never get to your 85. And when the price is very weak, so if we look at, say, 4-day, trend is about 85, range level is about 85.7. But what if they just reject off that? So you just sort of have to take your TPs at the various levels and then raise your stop loss, and best case scenario you get all your TPs, worst case scenario you get one of your TPs, and then you get stopped out. So this is 7-day close, which can't remember when that was, but you see they just pushed it down under that 88 range level and then just rejected off the range level straight down to the break or the origin. Now, this is one of the ones that's different between TradingView and, I don't know, the real world. We'll just call it the real world. So all you saw on TradingView is just a candle that just keeps on pushing down, and then this weird little bounce that just kind of sits in the middle of nothing, when in actual fact it was a close under that level and a push to support. Win 85. Someone just posted in the Discord, win 85. Perfect time for you. Nice. It's like 3:22 in the morning for me. But the drink's still cold. Why am I up? Don't know. I just didn't really feel like sleeping. Kind of celebrating. I had one of those turning points in life today, which was really good. So here I am, awake, enjoying it. Tomorrow night, I'm probably going to be out with friends who want to take me out to celebrate. So yeah, it's been a good day. Very, very good day. That might be our hold up actually. This is one of the trends we closed under today. And it's about where it rejected, about 82. That might be what's holding it up at the moment. Thank you, thank you. No, no. Actually, the 100% opposite of getting married. I actually, after 3 years of legal action, managed to get divorced today. It was very good. Everyone's going to think you're crazy for thinking that's a great thing, but it really is a great thing. Mhm. Yep. Why one of your better days? Yes. Yes, it does make perfect sense. It's yep, been a long time. Yeah, so there's another one. So this is why when I saw today's closes, I sort of just staggered my longs across, staggered my TPs across these various different things because we had some okay closes, like we closed above trend, but the other side of it is we also closed below things like this 82.453 level on the 73 day, and if this thing rejects and breaks that trend, then next level down is where well, basically it's a center zero. So next level down is just down, real down. because there is no next level. It's this lovely negative 23 number down here. So kind of feel like we're playing chicken at the moment with resistance. Makes so much sense for it to bounce and take out those shorts, but at the same time, it's pretty dangerous the way these things are closing. Yeah, I guess New York will open soon, why not? Let's have a look at what's happening on the lower time frame, eh? Well, any normal human being would expect that to go up. Set point. Ooh, tricky. It's kind of cool that they always go to open these markets and they have it right at the point of break between support and resistance. Hmm. So you've got 15-minute range. Versus 15-minute range. One want down, one want up. What's everyone reckon? What's New York going to do? That was last New York market. Dumpy dumpy. Thompsonville. Yeah, maybe. Let's see. Range. Entry. TP1. That'd be TP2. Once you've got the TP1, you might take one there at the range trend, just in case. Put your SL up here. If you get stopped out, who cares? Made money. Wow, lots of writing. Pretty clean entry. Hmm. Why do I like that entry? I don't know. I took this entry down here. Mostly just because we had a range, we did a hard close, and I think we had a trend at the time, which was like this. So we had this trend here. We'd crept across the trend, hadn't actually broken the trend at that point, so yeah, entered there and took first TP here, second here, third here, and now it's just waiting. Let's see if we get up to that 83 level. Why would I trade this? Truth is the move's too small. You could trade that, but it's only about 30 cents. So the thing is, it's everything's just fractal. So you just what you want to do is you want to find that on any given time frame, but you just want to find it with a bigger percentage. That's all you really want. Full engulfment, another candle, hard closed above the level, enter here, exit here. You find that on a daily, and you got a winner. It'll be a big move. Find it on a 15-minute in the middle of some FOMC, it'll be a big move as well. It's all just about percentage. So somewhere there's like a 15-minute candle. Oops. Where is it? I'm watching for this thing. So you got ones like this, all the way down from the bottoms. Sometimes you'll have a really big move sitting on quite a low time frame, but just at the very bottom of a range, which is often quite a good trade to take. Versus you look at the size of these 15-minute candles, they're just tiny. And you can still trade them, like this one here. Enter in TP, that you'll basically be spending the majority of it on fees, versus enter in TP. Yeah. It's always good too if you can find something where the, say if you put two fibs, come on. So go one body wick like that, which is your minimum obligation move, and then go one like that, which is your range move. Now, what I would typically do, because I'm relatively risk averse, is I'd look to put a smaller position on that move. And I'd look for another one on that. And then of course, anything below here, if it goes down and closes inside the hold, which doesn't typically happen with the very bottom of a range. You normally always get a bounce off the bottom of a range. So the idea is that this TP, if you enter here or below, you bring that down and you take it there, which is still profitable, but just less profitable. And that one, of course, is the one that has the super high percentage chance of playing out. So then if it goes down into the final hold, bounces up here, and then fails to the downside, you're not stuck with that position open. And if it goes up, you don't make as much money, but at the end of the day, you've still made money, and that's kind of all that counts. So as an example, of one that's actually played out here and here. So that's kind of your minimum obligation TP. Definitely going to bounce back to that level. Enter here with the TP up here. But you're also going to enter below here. And if it does enter here, TP both here, move that down. And yeah, it does that, but all you're trying to do is make that per day. Or maybe 3 or 4 of those on a 15-minute chart. But maybe one on a 1 hour or 4 hour. All depends on how much the token moves, I suppose. But so this would have been 2 trades. First one there, would have TP'd there. Second one here, just TP'd there. Kind of a bearish open for New York, really. Hold level, hold level. See if this holds. As soon as I TP. Yeah. Yeah. Yeah, I quite enjoyed the everything up to about 114k the first time on BTC. That part of the market, from about 20k up, because you can just be blindly long bias. Like, if anything came out, it was just who cares? It's just FUD, whatever. It'll end up higher. And then after 114, it all gets much harder, and you're sort of always just walking on eggshells because you know that soon we will change the macro trend and things will start going down. You just don't know where, you know. So, yep. So sometimes, yes, you long, you TP, it just keeps going up. I remember watching it go from, I think it was 114 to 120, might have been. 114 to 120. I was watching it go up after I'd already sold, and I was like thinking, do I go back? Do I go back? Do I go back? And it was like, yeah, nah. In the end, it came down. Um, River. River. What's River? River? What type of product is River? Is it that? Hmm. Um, yeah, it's definitely going up. Why? Wow. Hmm. From a monthly range perspective, I'd be looking at taking TPs at 20, 27, 34. Probably wouldn't be expecting it to get to 34 just because it opened under 27, but ooh, yeah, that's nasty. Um, yeah, I would have taken my first TP here. Oh, see you later. Yeah. So from a weekly perspective, this is, you know, center zero type structure. That right there at 21.35 is your retest. So it may be able to go up inside that, but the thing is, definitely if you're in profit, you want some profit. You want to take some profit because that's already kind of at a point where it could turn over any time. So then if we look at the hold, go weekly, go daily. Maybe, maybe that break level gets retested at 38, maybe. 64, 48, that's probably what I'd look at. So would have already taken a little bit because it's run into a range level that could literally flip around and send it to nothing. And then 27, 38, 48, 64. And I'd get more confident in those levels if it closed over this for the week, over that 24.77 for the week. So I tried to create a range that went up into it, but doesn't really have a lot of confluence there. Neither does that. Yeah. Hmm. So it's been through enough trend breaks to move up, so that's good. Tends to peak then crash hard and fast. Yeah, just set TPs. Come on. Get above the line. One hour range trade on Sol, yeah. So we had initially this range here, which is kind of actually in play still, but that's not the one I traded. So we came up, hit the level, came back down, created this one, and it was really this candle here that got my interest. This close above. And at the time, we had this trend. And so when it passed through the trend and started to dip, come back down, it was at that point that I was like, okay, I'm going to enter this, and entered here because it hadn't come up to this level yet. And then I just took minimum TP here, next here, next here, and we're still holding it. This is kind of non-committal right now. We're just we've closed under the level. We haven't created a hold. It's rejecting off it, so it might come back down. Good old New York dump, or it might go up, but yeah, at this stage you just don't really know. So yeah, just wait and see. But yeah, main driving forces behind it was we'd started here to try and create a range and rejected, come back down, gone the other way, flipped again to go up, hard closed over the 1618, got this random dip kind of out of nowhere, enter, TPs. All right, I think it's bedtime. 4 o'clock in the morning. Decent run. Catch you all again tomorrow.